Hello and welcome. I'm Lynn Langett. This talk is Angel Investing 2 years in. So to know a little bit more about me, I'm an independent cloud architect and developer. I spend about half my time educating on technical topics, building courseware, and speaking all over the world. And the other half, I work with virtual teams building genomic scale data pipelines. So why am I here talking about angel investing? Well, about 2 years ago, I started formally angel investing. Now, it's important to understand that I represent a particular type of angel investor, one that's a little bit uncommon, and that's why I'm giving this talk. I am really a starter or a beginner angel investor. I don't have, money from an exit. I don't have substantial financial means. I have a little bit of discretionary money that I've been using to start to angel. And I wanted to share with my audience my journey, thinking that some of you might be interested in learning from my experience. So one of the reasons I got into this is because as I'm aging, I am trying to make good financial decisions. So I have, money invested in retirement, money invested in real estate, and frankly, I've been successful there. So I have some other money as well, and I wanted to think about how to diversify my portfolio in general, but in particular this other money. As I was thinking about this and exploring and studying, I noticed this fact from public.com. Women invest 40% less than men on average, which means they stand to lose out on as much as $1 million in wealth creation over the course of their lifetimes. And this is significant not only for we women, but it's significant for the impact that we can have, because money can have impact. And so I think it's important, and it's one of the reasons why I'm making talks like this, because I find myself often being the only woman in a room full of male investors. And I'd like to see the investment community be more reflective of the general population. So back to that other funds. I had been giving a lot of that other to nonprofits. And one of the questions I was asking myself is, does nonprofit giving have the impact that I want to see? And this, you'll see, drives my investment thesis as it's evolving. So to start, I want to emphasize that the amount of money I'm talking about is really, really small compared to what at least I had thought about was typical angel investing. And that's something that I hope that you'll have as a takeaway, that's possible to actually have an impact as an angel investor with a relatively small amount of money. So if I looked at my overall allocation of my money, I have 60% of the other in savings. I'm, a conservative Midwesterner. I have 30% in mutual funds, and I had 10% discretionary. So it's a small, but as I think that you'll see, impactful amount of money in this particular sphere. So, one of the things that I started with, because this money I had used mostly for nonprofits, was thinking about how I could have more impact through thoughtful investing. And I think that, this was particularly important to me because I'm a relatively new resident to a city that has a lot of needs, and that's Minneapolis. I moved to Minneapolis right before 2020, and we all know all the challenges that the city is undergoing. So you'll see throughout my discussion of the places I chose to invest that impact was really driving a lot of those choices, along with the desire to, have a return. So one of the ways that I started to know about possibilities is there's an article in our paper talking about this person, Reed Robinson, who's very active in the startup community here in the upper Midwest and the Twin Cities, that was intending to start a new VC fund, basically, focused on early stage startups. So I actually got in contact with Reed after I read this paper article, and he was actually fantastic in explaining his vision and talking about the Twin Cities startup ecosystem. So he features in my story as we go along. So I still was pretty nervous because I knew a little bit about startups from my work in tech, because I'd often supported them from a tech standpoint, not from a financial standpoint. This is a highly, highly risky investment class. And I don't want to in any way encourage people to take on risks that don't make sense for them. One of the ways that I looked at this was to say, what is the, smallest amount of money that I could afford to have this high level of risk. These are new businesses. And even in Minnesota, where interestingly, we have the highest rate of startup success in 5 years, which is good in that our startups are successful, but it points to a need for exactly what I'm doing, to put more capital in early, because we should have more failures because we're not funding enough new businesses. It's one of the reasons I decided to do this. Many startups fail. So this is very much a numbers game, and you're not going to get a return right away, if at all. So again, you need to know what you're getting into here. And the returns are volatile. You're buying future equity. So you're getting in at a early stage. And if and when there's success, you're going to get a good return. But it's a big if and a big win. So you're going to hear a lot through this presentation about de-risking, because any activity, particularly something with your money that has a lot of risk, you want to de-risk in as many ways as you can think of. Well, I've for 11 years now run my own consulting business and been pretty successful. So I know a little bit about de-risking business investments. And I took a set of practices from my consulting and I applied them to angel investing. In consulting, I call it learn, build, teach. So I often am on the cutting edge, so I have to learn about new technologies. In order to validate my learning, I'll build an actual technical example, and then to share with my community and to basically force me to learn more, I will teach what I've learned. So the way that I apply this to angel investing is learn the taxonomy or the words or the terms, because there's a lot of them, and listen to as many other people as possible, because a lot of people have been doing this for a long time. Practice, vet or check out a lot of startups. And in this first year, I vetted over 80, probably too many, to be honest with you. I did just a lot. And I have subsequently learned that it doesn't make time sense for me or the startups, because I was probably too nice and listened to too many. I don't know if that's just necessarily nice because I'm wasting their time, but I tried to at least give them feedback. I'm saying no a lot faster now. And then make actual investments, start really small. And, this is a set of practices that has helped me to have an entree in, because when you're writing that first check, if you're not nervous, you don't know what you're doing, because you should be nervous. So learning the terms. The terms are really daunting. Every term on here, I didn't know what it was really until, when you're going to write a check around it, you want to really know. So one of the things I would tell you is, and kind of as a weird aside, I have a degree in linguistics and I speak some foreign languages. So I kind of think of investing language as like a human foreign language. If I don't know what a term is, if I don't understand pre-money valuation or post-money valuation, I'm going to ask. So it seems like common sense, but I have found quite a lot in just my small subset of people who are interested in investing who, maybe should be asking more questions. So you really want to ask questions if you don't understand a term. It's okay. So one of the things I first learned is there's two types of investors. There's accredited and non-accredited. And again, I'm just reporting the news here. There is a lot of, challenge with this, but this is the way it is. So non-accredited investors are starting to have some opportunities to invest at a really, really micro or tiny level, which is good. But there's some caps on it. One of the areas that I worked with is this website called republic.co. It's almost like it's like a microfinance, but for investing. And this isn't regulated, but the cap that they have is anyone can invest, but maximum is $2,000 total, or 5% of a person's net worth. And it's basically crowdfunding. Why that is interesting is because it opens up the world of investing. Why that is not so great is it might offer investing to people who don't understand the risks. So accredited is the more traditional. Accredited requires certification of your income and assets, and the amount varies by U.S. state. So, here in Minnesota where I live, you need to get an accreditation certification from the state. You pay for it and you get a number. And more traditional angel investing requires this accreditation. This is a pretty big barrier to entry. Typically, it's a net worth of $1 million plus. There's different other aspects around income, whether you're single or married. And it will open you up to a wide range of investment possibilities. And this gap between non-accredited and accredited, I think, is a greater challenge in this space because more people would like to invest with proper safeguards, and the accreditation bar keeps people out. So this is an area that there's a lot of discussion. So it's kind of interesting, to be honest with you. But I just kind of wanted to add it because I started kind of in the non-accredited area, and I think even if you are accredited, it's a good place to start. So I started with Republic.co, and one of the things I really liked is they have a whole education section. And, one of the key concepts around angel investing is you are often, not always, but often, the terms that you're purchasing is on the term sheet is for a crowd safe. So this is a very basic concept, as it says it's an investment contract between investors and companies looking to raise money. So investors make investments, and this is really important, for the chance to earn a return. You could completely lose all your money, and you will for a lot of your investments. So I just emphasize this, and I think this is good because Republic is a platform for both accredited and non-accredited investors, and they're good about explaining it. But I just caution that not all platforms that allow non-accredited are this transparent. So one of the de-risking strategies is to learn, and I really liked the whole education section on Republic.com, and I would recommend it. Second de-risking strategy is to start with really small investments, and I actually started my first angel investing on Republic.com with really small checks because I was intimidated and I wanted to start with smaller amounts of money so that I could become comfortable reviewing or vetting companies. So on Republic.com, I would say I vetted 30% of the companies the first year that I vetted. I vetted quite a few companies there. And one nice thing about it is it's a website. And so you can just look at the information. It's presented in a standard manner. And if you're interested, you can ask questions through a forum. And this can be more time efficient than the more traditional, meetings and pitch decks and stuff. So you generally are going to develop a process for reviewing. So you need to understand what the product is, which surprisingly is difficult with some startups, what the problem they're trying to solve, how many problems, often they try to solve too many, what differentiates them from the competition, do they know who their competition is, why the people who are running this business are the right people for this, what is their background, what is their experience, both with the solution and in business. How much money have they got so far? Do they have friends and family? What's their runway? What's their understanding of financials to market? And do they have any customers, paying or free? What's their velocity? I mean, there's many other questions to ask, but this is kind of a set that I developed as a standard for myself. So my de-risking strategy for this level was to make a lot of small investments. And I made 5 investments. The average check size here was $500. It was $500 to $1,000. They don't, it's not, you don't have to, I think you can make the small as $25. And for each one, you're going to get some agreement. Most of them are going to be safes, but not all of them. Depends on what type of investment you're purchasing, so you can start to understand the different possibilities. And I thought this was a great way to start. I would really recommend it. It was a nice ladder before I more formally angel invested. I felt more confident. One of the things that was interesting is one of the things I invested in on Republic was actually a fund called Backstage Capital, run by a woman called Arlen Hamilton, who I really recommend you look at any of her work. She is a Black lesbian based in Los Angeles who has a non-traditional background. She comes out of the music industry, and she just saw the wealth disparity and decided to do this. It's a pretty inspiring story on educate herself. And she has raised millions of dollars, including money on Republic for her fund. And it's interesting because what her fund shows here is that this micro investing was more inclusive of people who didn't traditionally invest. And again, this goes to this difference in wealth, basically, wealth gap. And so there are less people in these categories who could be accredited investors. So it opens up investing through this non-accredited platform. And again, this is just something I've been thinking a lot about because, it's great that I'm in the fortunate situation I can be accredited. And I think that it would be great if more, especially tech people who could be accredited, would think about investing. And I've talked about this, but even more broadly, I would like to help to build possibilities to include more people in investing. So something between, crowd and accredited. I don't know what that looks like, but, it's one of the reasons I'm giving this talk. So after I went through that, and I had been talking to Reed and his growing group called Groove Capital through this process, I decided to formally join as an angel investor. And the way that this works is you pay a fee, and what you get from that is the Groove team will vet deals for you, kind of like Republic does, but a lot more intensely. They too will present a website for each deal, but rather than just, threaded web conversation, the Groove team will, work with the companies, and they will have presentations that you can be a part of and talk with the company founders. It's much more intense vetting, if you will. Groove is focused on Minnesota, which I thought was really fantastic and really aligned with my strategy, and want to create investments for early stage companies and be inclusive of businesses led by women and people of color, which again aligned with my strategies. So I joined. I was one of the initial angels in Reed's group, and it's been a fantastic experience. So once I joined, I decided to become visible. And so I changed my LinkedIn profile to add angel investor. And it was kind of interesting because the day I did that, I of course got, bombarded by startups who wanted my time, and few I took deals. But interestingly, I got bombarded by other people who were interested in investing who didn't know how to do it. And so it was interesting because even before I wrote my first check at the level of an angel, people were asking me to explain angel investing, especially women. So it's one of the reasons I'm making this presentation, because I kind of want to share my journey and show how it is a journey and how I have worked to learn about investing, because it's possible to do so, even though it seems intimidating, and it can be, but it's something that can be learned like anything else. So it's been interesting. I've done a number of presentations on angel investing, and I really have imposter syndrome because I feel like a baby angel, to be sure. So to that end, there is a really vibrant ecosystem here in Minnesota for startups, and there are multiple funds and accelerators and events. And so I tried to become really active. And you want to have the power of the group. You want to just go and, whether virtual, now that we're coming out of COVID, much more in-person events, and just listen and really learn about what kind of startups are happening, what industries, what verticals, what accelerators. And there's just a real lot to be learned from connecting locally in your particular geography. So did I make an investment? Yes, I did. The first investment I made, I'm very proud of. It's in a Minneapolis-based company called Turn Signal. And this is a screenshot from the vetting website that Groove provides for each company. And you can see there is a video from one of the founders talking about the company. And it's really helpful. And again, one of the big takeaways, it's kind of unsurprising in hindsight, but the power of the group to vet and present all the companies in this standardized format versus just companies randomly trying to pitch to me. It's really worth it. Because as you're trying to evaluate companies, if you have this standard vetting process like shown here that Groove uses, it's so much easier than, trying to ferret out, if somebody's just randomly pitching you, like, where's your pitch deck? Where's your summary? Do you have these things? So the format was great. The vetting is great. And this company is great. I highly encourage you to check them out. They are, really trying to improve safety. They talk about people getting home safely. The app is a phone app that when you're stopped, when you're driving, that it connects you to an attorney so that everybody can get home safely. And it's really justifiably taken off. It's in many U.S. states. And this is just really completely aligns with everything I wanted to do with my investment money. It does good. It is good. And it's growing. And I think it's going to become successful. So I feel like my first one was really a hit it out of the park investment. So thanks, Groove, for connecting me. So next thing that I found out was, I love to de-risk. It's something that was surprising and wonderful. In Minnesota, we have, and this is not always, it gets funded on a year-by-year basis, a 25% credit to investors. It's, business development for certain types of businesses or businesses owned by women, people of color, so on and so forth. But that's awesome. So in other words, you write a check, you get 25% back as a check. And what's also great is you don't even have to be in Minnesota. So if you want to, support Minnesota businesses from Texas or California or wherever you are, the state of Minnesota will write you a check. So when I found out about this, I was like, oh gosh, this really aligns, and I am so excited about it. I'm so excited it caused me to write my second check. So I'm starting to create an investment thesis as I'm looking at all these companies, and I'm, asking more questions than can I afford this or does it match my thesis? But I'm trying to show you the genesis of it because I think it was helpful to me, and I think it'll be helpful to you. So the next company I invested in is another Minneapolis-based company called ProServa, and what they do is they provide alternative credentialing and education for school teachers. And I'm leaving out some of it, but as I'm developing my investment thesis, this criteria emerges. So it has to do good. I want it. It has to be a business that will make our world better, and that's just part of my thesis. And it should have impact locally if possible, and target underrepresented groups would be fantastic. This was vetted through Groove, and angel credit because the founder is a Black man, and so awesome it hit all the bars. So. Again, this one was, you're never just really happy to write a check because you realize you might never see anything from it. But gosh, this founder in particular, I was happy to give him a check. He is really changing the world of education. So the next founder and business that I invested in is Sarkio, and this is Beth, the CEO. The solution is to take stem cells and to revert them, a person's stem cells, so that it can be knee cartilage, so that it can reduce the knee surgeries. And this is Beth solving a problem that her own mom had. And I met her at a Groove event. It's kind of a common thread through my talk here. And she was trying to figure out how to get more funding. She's an experienced founder and further along in her business. And I was talking to her about my experience on the West Coast. So when I first started working with her, I connected her with some West Coast angels because they tend to write larger checks, and her business was further along. And I said, look, I just do not have enough money that I think that you're going to need. I think the best thing I could do is help you get money. And so that actually came to pass. And in working with Beth and having her develop her pitch for coastal investors, I learned so much about her business. And I just said, is there any way I can get on your cap table, which is investment speak for make an investment with a small amount of money? And she made an exception for me, and she allowed me to do that, which I'm really proud of. Again, it is a reflection of my growing understanding of the world of investment. When I initially was part of startups out in California when I was working for Microsoft, check sizes out there are so big. It's add a zero to all the checks that you write in the Twin Cities to the end of it. And I just thought it was not a world I could ever be in. And one of the things I learned in investing in Sarkio is that getting to know the founders opens up possibilities. So again, this was vetted via Groove and Angel Credit. So just fantastic. Next up, investment 4. So this is Quip2, and these are 2 adventure friends. I met these guys over LinkedIn. So what they are doing is they are creating a platform for bicycles and camping equipment, so that when you are in a new city traveling, you can rent somebody's bicycle or you can rent camping equipment. And this one, I talked with them. They reached out to me on LinkedIn, and I really, really like their impact because I would like to see more people bicycling. One of the things that has happened for me since I moved to the Twin Cities is I've become an avid bicyclist, and I ride my bike as much as possible. And I am really interested in businesses that support that because I think it has a strong impact on our climate and our health. And I have the problem when I travel, now I always want a bike, and I don't want to put my bike on a plane. So I just really understood this problem. The guys have business experience, and I went for it. This one, I feel like I maybe should have vetted it more, but why I'm sharing this is there is obviously an emotional component to investing, and you have to be responsible. You have to stay within whatever budget you have set. But I was able to stay within my budget and still make this investment. So I feel nervous. I wish I would have more angel partners here, but I'm still really proud of this investment. And then my last investment, you'll notice it says time. So Mark came to me through LinkedIn. He runs Socian.io, which is a smart drone company out of Chicago, although he's got customers in other places. And something I care really passionately about is ethical artificial intelligence. We've seen a lot of stories in the news about bias in AI. And Mark and I had a really fascinating discussion about our passion around this. And I have done quite a bit of research in this and actually some experimentation, and I wanted an actual use case. I've done professional work with Google AI, and I had some connections there, and I felt like the most impactful thing I could do for Mark and his business was to use my professional connections, and I was successful. So what I'm really proud of here is, again, I was kind of at my money limit. So when Mark came to me, I said, look, Mark, I'm at my money limit. I do not have any more discretionary money, but I have knowledge and I have connections. So one of the reasons that I'm sharing this is as I start this angel journey, I have as much, if not more, business connections than I have funds. And both of them are valuable to startups. So I think of them as both components of things I can give to startups as an angel investor. So again, they do good, safety and ethical AI, Midwest impact. It's interesting now, just recently here, we've had a big discussion for the Minneapolis Police Department about buying drones, and it was around ethics. And I think Mark actually engaged with them. So I didn't know it when I first started working with him, but it looks like it's going to have local impact here in my city as well. The way that you invest is money or time. So those are my first 5 formal investments. And, this focus of, do I understand the business? Do I like it? And how can I make the most impact is really driving my investing. So one of the things that I wouldn't have believed before I did this is that my average check size would be $7,500. I thought, again, because my experience in the West Coast, it was like $50,000, $150,000, $250,000. I didn't think that I could do anything with checks of this size. Not that this is, no money, but this is, within a budget that I can tolerate in terms of risk. This represents 5% of the companies that I spoke to, which is relatively high. I think that from hearing from other angel investors, it sounds like 1 to 2 to 3% is what they invest in. So again, for those of you that are founders that are trying to, get funding, you're going to hear a lot of no's, and you're just going to have to harden yourself to it, because that is the world of investing. I'm thinking that this is like at the most 5% of those that I talk to, I would consider funding. Like, I'm wondering if it's not too high. So again, those of you that are listening to this, trying to figure out how you can, interact with angels, really be hardened to no's. Don't take it personally. There's just a lot of things that I saw I was really interested in, but just did not meet my investment thesis. Most angels that have been in this for a while talk about investing in 10 companies and 20 companies and 30 companies. So how am I going to do that with my, small amount of money? What I have been doing now in my journey, and I started out with, I didn't mention this, but a friends and family investment back in 2019, 5 crowd investments in 2020, 3 angels in 2021, and 1 board membership, which I also didn't really get into, but I've done 2 board memberships, 2 angel investments in 2022. In 2023, I'm currently evaluating 2 different groups to join as what's called an LP, or a limited partner. And what that means is you put in a larger amount of money, and then you are more formally a part of this investor group, and you can leverage this pool of money in terms of negotiating better deal terms, so that you should be able to invest in more companies. And this is a big step because it's a non-trivial amount of money, but it is, the next step on my journey. And really, in order to have a higher likelihood of getting a positive return, you need to be able to take this step, because if you invest in 1 or 2 or 3 companies, the likelihood is really low, really, really low. It's the law of large numbers. So I'll certainly come back and update you a year from now or 2 years from now on my journey, because I think it's an important one. So to keep learning, I linked some resources here. In particular, this third one, the Angel Capital Association. They have a series of training available for non-traditional investors, women and people of color. I'm actually in a cohort now that's sponsored or coordinated with Groove Capital. And it's a 3-month long program where we're more formally trained in investing, and it's actually paid for by the federal government. So there's no charge to us. We had to fill out an application. But again, the key point is, like anything else, this is a process, and you need to spend time in learning how to be a better investor so that you can get the results that you're looking for. So again, I hope this was helpful. I'm Lynn Langit. Thanks.